Hey everyone, welcome back to the Crypto Code. Today we need to break down something major that's forming in the background of this market because even though prices look terrible and sentiment is basically dead, there's a huge catalyst lining up that almost nobody is talking about, and it could end up being one of the biggest drivers of this entire cycle. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so right now retail is completely checked out. If you look at Google search trends for crypto, we're sitting at the lowest levels we've seen in years. That's not what a market top looks like, and that's exactly what a market bottom feels like. It's quiet, it's boring, it feels like nothing is happening, and ironically, those are the moments when the foundations for the next major move are being built. You can see it in how people are reacting or not reacting to major news. XRP recently launched a spot ETF on NASDAQ, and the market barely blinked. That should have been everywhere, but retail is asleep, so even big announcements barely make a ripple. Meanwhile, behind the scenes, the fundamentals are exploding faster than ever. Stablecoins, for example, are seeing some of their strongest growth in history. Circle, the company behind USDC, just reported a massive quarter. Revenue is up 66% year over year. On-chain stablecoin volume hit $9.6 trillion in a single quarter. That number is almost double the previous quarter and up more than sixfold compared to last year. That's not normal growth, that's structural demand. This cycle has already shown us that catalysts, not hype, drive real moves. Bitcoin's rally started because ETFs were approved at the same time the halving reduced supply. Solana's moment came after unexpected political attention pushed the narrative. Stablecoins skyrocketed the moment the Genius Act passed. Every major run this cycle had a clear trigger behind it. And that brings us to what's coming next, because this next catalyst is shaping up to be bigger than Bitcoin's ETFs, bigger than Solana's narrative moment, and even bigger than the stablecoin bill. The next major catalyst is the Clarity Act, also known as the Market Structure Bill, and it has the potential to reshape the entire U.S. crypto industry. This bill already has bipartisan support. It lays out clear rules for exchanges, defines the different types of digital assets, and sets up a regulatory framework that lets institutional money flow into crypto safely and legally. It also opens the door for stablecoin-based credit markets, something that could bring in trillions of dollars in new liquidity. And here's the key point. Once that money enters stablecoins and regulated crypto products, it doesn't just leave. A huge portion of it stays inside the crypto ecosystem, earning yield, moving between chains, flowing into Bitcoin, rotating into Ethereum, and eventually spreading into altcoins. This is how entire cycles expand. Now, that doesn't mean prices go straight up from here. It's very possible that we still see dips or sideways action for another month or two. We saw the exact same thing after the halving. We saw it after the election. We saw it before Solana's big run. These quiet periods usually show up right before the next catalyst hits. They shake out the impatient money and set up better entry points for people who understand the bigger picture. So here's the bottom line. Retail interest is at rock bottom. The market looks dull and sentiment is weak. But regulation, ETFs, stablecoin adoption, institutional trading, and liquidity infrastructure are all building at the same time. The Clarity Act could easily become the spark that ignites the next major leg of this cycle, and almost no one is paying attention to it yet. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.